Hey, good morning, options traders, and welcome back, everyone. Well, chances are that if you've heard the term implied volatility, you might be led to believe that it's really the only thing you need to know to successfully trade options. And so let's take a little closer look at this idea. Does implied volatility give you an edge? Well, first, let's take a look at what volatility is. Recall that volatility is just a mathematical calculation. It's just a number. And what it does, it gives us the size of the jumps over the recent past for an underlying or an index. And if we have a lot of jumps in there, a lot of gaps, big swings intraday, ups and downs, you're going to get a high volatility number. On the other hand, if they're fairly calm, then it's going to be a low volatility number. So take a look at the VIX. This is the volatility index, which is just the volatility calculation for the S&P 500 index. And there's an important point about this, that it just goes sideways over time. So take a look from 1990 through the present, just goes sideways. And so when you are looking at an option, a current options price, there will be an associated volatility with it. And that is what we call the implied volatility. But that is simply the market's guess about the future volatility over the life of the option. So the reason this is still important, gives us some clues, is that volatility is mean reverting. So again, take a look at the VIX down here. Long time period, here's the average, right at about 20. And there's no question that when the volatility gets below here, it tends to get pulled back up towards the average. That's what it means to be mean reverting. Mean is just a fancy word in statistics for the average. It tends to revert towards the mean. On the other hand, if the VIX is high, like up into here, back here, 08, 09, coronavirus, there's a tendency for it to fall back towards this long-term average. So yes, this can give us some clues about whether it may be better to buy or sell, but it's not the end of the story. And so traders are usually taught to check for IV, and that's certainly something that they should do. But unfortunately, a lot of times they go over the edge with this idea and think that it's all you need to know. And they'll say, well, buy the options if the IV is relatively low, meaning that it's below some historic average, or sell if it's relatively high. And you hear this so much. Oh, the implied volatility is high. Sell, sell, sell. As if they've got some type of a guaranteed trade just because they're looking at implied volatility. Well, one of the problems with this is that you must assess if it's high or low, right? Just because you might see that the volatility is 40 and the historic is 20, you still have to make a determination if that's high or low. Now, it might be relatively high, but is it going to be the high in the future? So that doesn't necessarily mean that it's high just because you think it's high. It's just a relative high. So remember that the IV is the market's opinion, but whether it's high or low is really yours. It's your determination that comes up to the conclusion that it's either high or low. So really this whole notion of comparing the historic volatility to the implied volatility is really just opinion versus opinion. So where is the edge? Well, again, an edge is only as good as your guess. So the IV only gives you an edge with volatility reverting to the average, and not only reverting to the average, but while you're in the option. That's important. So let's go back to the VIX. Here's our long-term average at 20, and let's say that right now it's trading at 40. Well, is that relatively high? See, it's a little bit of a trick question. Sure, looking throughout the past history, only a few times has it ever touched 40. And we could say that it's relatively high. But does that mean it's going to be the high over the life of the option? Well, if we had sold it back here, we did quite well. But if we did it here, the volatility doubled. You did it again during coronavirus. It actually doubled from that number, and it could actually put you underwater. Now, even though in both of these cases, both of these extreme cases, volatility did eventually fall, but are you going to be able to stay in that trade while that's happening? See, it's not just about calling whether the IV is relatively high or low at the time of the trade. The bigger question is what's going to happen while you're in it. So there are really two risks that you have to consider. Volatility reverting or not reverting is what we call vega risk. So recall that vega is one of our Greeks. It shows the option sensitivity to volatility. So whenever we talk about volatility or looking at implied volatility, comparing historic to implied, those are all vega risks. And sometimes I tell traders to think of this as swimming with the current. So think of a stream that's got kind of a gentle current going in one direction. You'd rather swim with that current. And that's where it can definitely help to check your implied volatilities. But it's not the end of the story. And that's because even with knowledge of volatility, and even with a pretty good grip on whether it's relatively high or low, you always have delta risk. So remember, volatility is about the size of the jumps, not the direction. Delta is about direction. Those are two different concepts. So just because volatility may in fact revert, you might be correct about that, the underlying stock might actually move against you. And that is the delta risk. And so this is probably one of the more important reasons why you have to understand not only volatility, but also your technicals. Is this stock more likely to break out, whether up or down, go sideways, bump into resistance or support? You need to have a handle on that in addition to your opinion on volatility. And so for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.